Live from Bloomberg's World Headquarters in New York, I'm Shonali Basak.
And I'm Tim Stenovec. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
And Bitcoin stumbling to start the year, but it is bouncing back today in just a moment. Delta Blockchain's Kavita Gupta joins to discuss the year ahead for crypto.
We are now less than a week away from Donald Trump's inauguration. The crypto industry eager to have his administration in charge.
And in a moment, we're going to hear from BlackRock's Robbie Mitchnick as his firm's Bitcoin ETF celebrates a one-year anniversary.
All that and more ahead over the next half hour on Bloomberg Crypto. First, though, a look at Bitcoin this year. And as Shonali just mentioned, a little stumble out the gate. So far in 2025, it is up about 2%, but that masks some of the volatility that we've seen over these last 2 weeks. It did get as high as $103,000 per Bitcoin during the first week of the year. But then look to last week and then look to yesterday. Yesterday, it fell for ever so brief a moment to below $90,000. Bitcoin and the wider crypto market have had a shaky start to the year. They've been hurt by speculation that the Fed's window for interest rate cuts is closing. Bitcoin may be a bit higher so far this year, 2% to the upside, but smaller tokens, Shonali, such as Ether, are lower for the month so far.
It's not just Bitcoin that has been volatile. Of course, cryptocurrencies are volatile assets. We're also looking at a volatile equity market. And this is here the rising correlation between Bitcoin and the equity market, in particular the NASDAQ 100. That correlation is at the highest level since 2022. It indicates that Bitcoin will be less resilient against broader downdrafts in other risk assets. You can see for much of the last couple of years that correlation has existed, only turning negative a couple of times, a few times really. But the rising correlation just shows you that it might be a little harder right now to take on some risks, Tim.
Well, yesterday, Van Eck Associate CEO Jan Van Eck discussed concerns around this correlation on ETF IQ.
To me, the disappointing thing as a Bitcoin advocate has been the high correlation with the NASDAQ over the last 6 months. You know, just as a lot of people are looking at it for the first time, that's not what you want. If you look at the 10-year correlations, they're almost zero, which is really what a diversifier should be. So anyway, we'll have to see how Bitcoin performs going forward. It's a little bit of a negative for me.
Delta Blockchain Fund founder and managing partner Kavita Gupta joins us now. She sees Bitcoin topping 125,000 this year. If you think about the more recent risk appetite, the tapering off, therefore, we talked about this before. A lot of people bought the news after Trump had won the presidential election, but some of that steam has really rolled off. So what would be the next catalyst to bring some excitement back into the industry?
Hi, Sonali. A very, very happy new year. I feel like January 20th, everybody is looking forward to. And I feel that once the president is in the office, we're going to see a very different than what we are seeing now. Like the liquidity crunch today, I don't think that's going to exist. And also with the openness, like we have a crypto gala next year, right? So with the openness to everything what's happening with this administration, the court results which came out yesterday about asking SEC, why didn't you pay the clarity? I think people are hoping that there's going to be a big buy mood and economy instead of creating a short-term sell opportunity for a lot of people. Because the ETFs, and if you look at a lot of whether it's Ethereum, whether it's Bitcoin, the demand is still very high.
Kavita, I'm wondering, though, because even though we've seen a little bit of volatility as we start the year, we still see Bitcoin higher by about 40% since election day. So what is priced in versus expectations? And where is there still room to run higher, given that it has moved so much higher in such a short time on expectations from the incoming administration?
Yeah, Tim, I think it's pure institutional. I feel like now everyone at the institution level is ready to adopt Bitcoin. It's not some random country which is saying, hey, let me have it on Treasury, or some mid-level funds trying to keep it. It's like every top banks around the world is now thinking about, okay, I need to get custody for it. I need to understand it. I need to own it. I need to provide it as a private wealth service to our clients. So it is just the whole run of things. So I feel like as we are looking towards 2025, it's definitely going to be the year of Bitcoin, not only as an asset value, storage value. As I've always said, Bitcoin has always been a goal for me, and then Ethereum as a gas. But also I feel like technology-wise, so much projects are coming on top of Bitcoin that the whole decentralized financial industry has somewhere shifted into Bitcoin. You are looking at a multi-billion dollars TVL and liquidity on the products which are getting built on Bitcoin. So from degen community to institutional adoptions to government adoption, now Bitcoin has become that benchmark for crypto.
At some level, if you do see more governments and even potentially companies acquiring Bitcoin, what does it mean for the retail investor in Bitcoin? They do want to see price appreciation, but is there a point here that it does get a little harder for retail hands to be changing Bitcoin hands?
Yeah, if you ask a person like me, been in the space for over a decade, I already feel like we are feeling that tight, that like, okay, that like last year there was a time when Bitcoin was went down to 60K and then came up to 108K. But are we going to see the time of 2023 when Bitcoin was 30K to 120K or 100K in that time? I feel like the volatility is going to decrease for sure as the Bitcoin prices continues to increase. Of course, it's a supply demand platform, but at the end of the day, somebody getting into the market now from a very retail perspective, it is still better than having bonds or having 5% treasury yields, because it has a huge potential to still give you much more than 20 to 30% yield.
Kavita, while we have you, I got to ask about MicroStrategy and the fact that there's so much concentration within one company. Our story on MicroStrategy out yesterday says that the company now owns over 2% of all Bitcoin and around $41 billion of the crypto. Is there a concern with concentration risk here, that one company controls so much?
I think it is like a new bank system, right? The way we talk about how much US treasuries are owned by a foreign country or by individual banks and circulated, it is the same. I wouldn't worry about them owning 2% of Bitcoin. Believe me, I know individuals who owns very early from 2009, more than that. But I think what I would worry about is having such a public space on their security and their risk, and how and when do they decide to start giving dividends back, not only on yields, but some liquidity back to people. Could be interesting. But also MicroStrategy started when none of the top banks would touch it. So with BlackRock coming into the picture, Fidelity into the picture, a lot of mainstream banks, not only in US, but in UK and Switzerland, trying to take bigger positions. It's going to be fascinating to see what do they see risk? Is a custody risk, it's a liquidity risk, or is just being too public about how much do you hold? But as of now, I think MicroStrategy's risk has really paid off. There was a time everybody was making fun of them on Twitter in 2023 with 30K Bitcoin. But I think right now there is no scope for that.
Outside of Bitcoin, what is the crypto asset with the most potential in your view, and what would be driving it?
I think bunch of L2s. We definitely have ETH, but even like chains which are built on top of it. So XRP, Hedra, a bunch of them have seen. XRP, I feel like, is going to be next ETF, most probably along with Solana. I think these are the projects which has survived, which has proved themselves, and now look going for a big institutional adoption. For me, when I look for 2025, I'm like, Bitcoin is going to be a big narrative. Institutional adoption is going to be a big narrative. And that institutional adoption are going to come for these new tokens like Solana, XRP, Hedra, like bunch of those new projects, maybe Aptos and Sui. And I think that is what's going to drive the whole new economy from the retail perspective. From the bank perspective, I feel like TradeFi tokenizing anything. We have already seen President Trump and people associated with them launching their own exchange, crypto exchange, and supporting a lot of TradeFi digitalization. So I feel like since our identity and money was used as Apple Pay or digitalizing of money, the next biggest movement out here is going to be tokenization of your whole supply chain assets and the caches. So those are going to be the big narrative for me this year.
It's something certainly I think will come up with Robbie Mitchnick in just a few minutes. Delta Blockchain Fund founder and managing partner Kavita Gupta joining us from San Francisco. Well, coming up, BlackRock's IBIT just crossed the one-year mark after making history as the fastest growing ETF. We discuss what's next with BlackRock's head of digital assets.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. And last week, Bloomberg spoke with outgoing SEC Chair Gary Gensler about his record at the agency. Take a listen to why crypto in particular stood out to him.
It's rife with bad actors. I've been around finance for over 4 decades. And everything in the markets trade on a mixture of fundamentals and sentiment at any given time. I've never seen a field that's so much wrapped up in sentiment and not so much about fundamentals.
It's been a wild ride for BlackRock's iShares Bitcoin Trust ETF, which just turned one over the weekend. IBIT is the largest spot Bitcoin fund with over $51 billion in assets, making it the fastest growing ETF in history. It brought in institutional investors and individuals who were previously skeptical of cryptocurrency. And BlackRock's head of digital assets, Robbie Mitchnick, spearheaded the initiative, joins us now on set. Happy 1 year, I suppose.
Thank you.
Thank you. It's interesting because at the end of last year, you saw Bitcoin skyrocket above $100,000 per Bitcoin. You saw that interest really start to taper off at the beginning of this year. You've had an incredibly successful launch. You have had some outflows in the product in more recent weeks. What do you make of that as you enter year two?
Yeah, well, I think big picture, it was a pretty incredible first year for IBIT. Obviously, record-setting on a lot of dimensions, including inflows and asset accumulation. And as we come into year two now, we're focused on a lot of the same stuff that we were in year one, which is really being a valuable resource and an education partner to many of our clients. As we've talked about in the past on this show, we're still quite early days in terms of the adoption of the wealth advisory and the institutional segment. And so we're spending a lot of time engaging with those types of clients.
Is that where the growth is? We just heard from Kavita Gupta at Delta Blockchain, who said institutional is the next catalyst in 2025. I mean, how much opportunity is there?
Well, certainly the third bucket, which we refer to as end investors direct, was gangbusters out of the gates, right? And these other two categories, wealth advisory and institutional, there are much greater hurdles in terms of their process and the research and diligence that they go through.
Of those two buckets, which is a bigger opportunity?
It's hard to pick one, but probably wealth advisory, actually, because there's a lot of sort of momentum around firms that are working through their expedited approvals processes to allow advisors to actually put these ETPs in client portfolios. But institutional is very significant as well, and that's an education journey for many that's been playing out over the year. And we're starting to see more of them emerge, particularly over the last quarter, I would say. You saw more institutions and a little bit more wealth advisory in the overall mix of inflows.
When we talk about wealth, we're also talking about more and more retail investors getting into this too. And online, where you're quite popular, there are a lot of people who pointed out that a disclosure in BlackRock's own filings around this said that there's no guarantee that Bitcoin's 21 million supply cap will not be changed. Do you know something everyone else doesn't know?
No. This was kind of an unfortunate little crypto Twitter episode. What that was a legal disclaimer, right? As part of sort of FINRA, SEC marketing compliance. Anything that you cannot fully guarantee, you have to disclaim it. And so we put that statement. We have lots of legal disclaimers of that nature. This particular one happened to get picked up and set the internet ablaze, but we certainly hope and would not expect any change to happen there. As a large investor holding Bitcoin, that doesn't confer any ability to change anything, and even if it did, we view that 21 million supply cap as very fundamental to what Bitcoin is.
Do you worry that there's too much concentration risk in terms of the holders of Bitcoin right now?
It's not especially concentrated when you think about it. I mean, IBIT's been obviously very, very successful. It's still less than 3% of the total supply. The ETFs in general around 5-ish%. So still, sort of all that success and all that asset raising in 2024 is still pretty de minimis part of it.
But you had MicroStrategy in there, and it's now, you had an additional more than 2% of all Bitcoin that's out there. Right there, you have 5 players with serious concentration of the market. There's the ability for those players to make big swings in price.
Right, like is it better or worse for you for MicroStrategy to keep borrowing money and buying more Bitcoin?
Well, I think just focusing on the ETFs for a minute, it's important to remember that a vehicle like IBIT is a vehicle for lots of investors, right? So it's not BlackRock who's buying and selling. Truly, we're for ourselves. It's for our investors wherever they're creating or redeeming shares. So there's a wide diversification of who the end shareholders in IBIT are. You look at the 13F filings as one metric, 682 unique filers at the last quarterly mark reporting holding IBIT. That's a pretty broad investor
So
base.
should we look at the concentration of Bitcoin that MicroStrategy has differently than the concentration that an ETF from BlackRock has?
I think it is slightly different than the ETFs. But what's interesting is I can't recall one conversation with clients where a client was trying to decide between MSTR or IBIT, right? I think fundamentally it's just different investor bases. Of course, lots of clients are looking at the various ETFs and trying to decide which one to buy, but MSTR does not come up
One
with a lot
feature
of
of
our
MicroStrategy is the leverage that's embedded into acquiring more Bitcoin. Is BlackRock sitting around thinking, hey, we need 2-3 times levered Bitcoin ETFs?
No, Bitcoin's got plenty of volatility without leverage for a lot of our investors.
Then what does that product pipeline look like?
Well, I think we're going to watch how things evolve in the new administration, obviously, but I think we're going to continue to take a very discerning approach here. When we did IBIT, we knew that there was very significant demand from our clients to be able to hold Bitcoin in a turnkey, convenient exposure vehicle. Ethereum, to a lesser extent, but still substantially so, we knew that existed. We're still not seeing a ton of it for sort of the longer tail of other crypto assets, so it's a combination of the regulatory environment plus what we're hearing from our clients.
You know, it's interesting. When people think about BlackRock, the first thing you think about is ETFs. But the second thing I think about is the work that they do with governments around the world. So from where you sit, what does that conversation about a strategic Bitcoin reserve look like at a place like BlackRock? What do you think about it? What do your peers think about it?
Well, I don't know how that particular topic is going to play out, and I think that's probably best considered for folks looking at Bitcoin as some sort of upside option value, but probably not something that people should look at as being in the base case. And I think that the way markets are treating it today probably reflects that. What we're interested in from a policy perspective is, I think, the exciting proposition of bringing some clarity and frameworks to this space that in some sense have not existed, particularly helping the banks to be able to be service providers in this space, to act as prime brokers, to act as custodians in this space, which we think is great for the long-term institutionalization and maturity of this market.
What changes in the landscape would make your life much easier? Like, what would you want to push for?
Well, I think that's the biggest one. Is we have our bank service providers in the traditional world play a massive role. We have Coinbase as our custodian, who we have a tremendous relationship with, and who are great, and they'll continue to be that for IBIT. But as you think about a growing and maturing digital assets ecosystem, we want there to be lots of Coinbase quality institutional grade providers in this space, and banks haven't been able to do that to date. And we think it'd be great, if they're able to, to have that.
Even beyond bank regulation, inauguration is under a week away. When you think about President Trump's first 100 days, what would be the one thing he says for your industry that you're looking out for?
Well, so we talked about the crypto side, and that was my answer there. I think the other piece that's really interesting is stablecoins. And stablecoin legislation is something that's had bipartisan support, but didn't quite get over the line in the last Congress. I think very clearly there'll be momentum and support behind that, hopefully on a bipartisan basis, to get stablecoin legislation done. And I think that's a big unlock for the industry as well, because these are vehicles of tremendous power in terms of the innovation and financial efficiency and access that they can bring.
We'll be talking a lot about that this year, I think. What it means for payments. BlackRock's Robbie Mitchnick, we thank you so much for joining us here on set. Of course, 1 year since that launch of that ETF, that long-awaited spot Bitcoin ETF. We're going to talk about more institutions next. Italy's largest bank opens up to Bitcoin as the EU implements fresh rules across the digital asset space. We're going to talk about what's going on around the world next. This is Bloomberg. Italy's largest bank just made its first spot Bitcoin purchase. Intesa now holds 11 Bitcoin worth about $1 million as it pushes deeper into digital assets. Bloomberg's Anna Irrera reported on this from London. Why? It's interesting to see companies starting to get into this too, particularly a bank. What was the rationale?
So I think in this case, their CEO said today at a event that they were actually not planning to become a Bitcoin company or broker, but they just thought that they needed to get ready in case some of their bigger clients get interested in buying Bitcoin. And we've reported earlier this year that they had a prop crypto desk. But so far, they've only been doing derivatives, which is really what other banks have been mostly up to. So it's not a big buy for a bank. 1 million euros is not a lot for a bank, as the CEO said as well. But it is a big signal, right, that they're moving into spot. Because as you know, to buy spot Bitcoin, you need to have the right infrastructure, you need to custody. So the step in, the signal is quite significant.
Is the signal that they're putting it on their balance sheet for investment purposes for themselves, or is the signal more about what they're offering clients, Anna?
They're saying for now it's just a test to make sure that it's something that they have the capability to do. But we've also seen in Europe, and we're expecting more activity from large financial institutions, in part because finally the European Union implemented MiCA, which is this giant package of rules around crypto. So it creates a framework that makes it more easier, or at least more comfortable for financial firms to operate in this asset class.
We only have a minute left here, but it's interesting to see how MiCA is actually encouraging more investment, because there was a fear, wasn't there, that there would be some stifling of certain moves.
Yeah, we're actually hearing probably the opposite, that now as there are rules, they know how to operate within those frameworks. If you don't have rules, you can, you've seen what's happened in the US. You can then have the regulator come and say, actually, we did have rules. Those rules were the ones we had before. And the firms think, actually, those rules don't apply to crypto. So it makes it a bit more dangerous or risky for big banks to operate in the space. So it is a big signal that they made a big spot purchase, even if it's tiny in comparison to how big the market has become now.
Anna Irrera joining us from our London offices. Anna, thanks so much for joining us. I do appreciate it. Sonali, as we've been talking about, the incoming president gets inaugurated on Monday. It's our last show during the Biden administration. As we have talked about, a lot of people in the crypto community eager to see what happens under the next administration.
A lot of hope, a lot of skepticism. Let's see exactly what gets done. We will be here, though, covering it for you, same time, same place, next week for the first show under the Trump administration. Stick with us for that. This is Bloomberg.